Global Fintech Fest, organized by Internet and Mobile Association of India, along with its sister organizations, Payments Council of India and Fintech Convergence Council, and National Payments Corporation of India. The fest is presented by the Ministry of Electronics and Information Technology, Government of India and Reserve Bank of India, and is supported by Niti Aayog, Startup India and Invest India. We would like to thank our platinum sponsor, Visa, AWS, PhonePe, our diamond partner, Cred, our country partner, Australian government, our track partner, HSBC India and Refinitiv India, and our session partner, the UK government Department for International Trade. The second edition of the summit, with the theme FinTech Empowering a Global Digital Economy, will provide an in depth understanding of the latest business, policy, investment, and technology developments within the FinTech landscape globally. We welcome you all for the panel discussion on financial health and approach to build inclusive digital economies and finance SDGs. Without further ado, let me introduce you to our moderator, Mr. Jaspreet Singh, the Global Lead Financial Health and Innovations United Nations Capital Development Fund, who would be moderating today's discussion. Also, please welcome our esteemed set of panelists, Ms. EVV, the Head of Financial Planning and Personal Investing Consumer Banking Group, DBS Bank Limited, Singapore, and Mr. Stefan van de Woelderen, Sustainability Manager at Global Sustainability Department, Financial Health Lead ING. Dear delegates, please keep on posting your questions in the chat box. The panel may pick up a few at the end of the session and answer to your queries. Over to you, Mr. Singh.
Thank you so much, Swati, for the introduction, and good morning, good evening, everyone, wherever you are joining us from. I think Swati gave all the introduction in terms of why this GFF is so important, because when we're today talking about how technology or digital or finance can really empower people. Today's conversation on financial health and approach towards building an inclusive digital economy, can't be stepped at a better time. We have gone through a crisis, or rather, we are still going through a crisis in many which ways, and we have seen, how it has opened up to different vulnerabilities at the government and societal level, but also at individual levels, and how we have been able to cope up with that through different measures. Why we are talking of financial health, possibly I'll come to that in a moment. But I think this conversation, very well starts from this dialogue of, that there has been a constant policy push on financial inclusion for a long time. And someone, in a session 2019 said, and this is a governor of a central bank in Kenya, which is considered to be poster child boy of, the payments ecosystem and how it has shaped world markets, at least the agent banking and so on and so forth. He said, what happens after you have achieved 99% of people having bank account, having insurance? Okay, you are basically clocking big volumes and value in terms of payments, but then what? How is really that converting or translating into improving people's financial life? Yes, there is going to be an effect in terms of how payments infrastructure and its effect can be considered to be bringing in efficiency and value add to people's life. But then is it kind of helping build resilience? Are we talking of security and freedom as an outcomes? When we think of broadly where we want financial inclusion to be, right? So what is that vision of financial inclusion? I think this was a question that he posed to a large majority of people in that event, and there was a lot to learn from that conversation. That financial inclusion, the vision of success that we have, is very, very much narrowly defined by the access and usage of services. But then what? How does that translate into improving people's life? I have two distinguished panelists with me, with whom we like to kind of explore this conversation, because they, in their own different context of banking sector, especially, have been able to start actually looking into this entire question. What next? Where do we lead from there? What we have got the financial products out there, but then how it is really helping translate into improving resilience in someone's life. What do we have to do as an intermediary or an institution, service providing products to the customers, and trying to explore that different ways in which the customer can be served better. So while they have both experienced in terms of exploring the entire idea of what next, we'll learn from them individually in terms of what exactly are they doing, and how do they look at moving beyond financial inclusion, which is narrowly defined from access and usage perspective, to a more broader concept of financial health and well-being. And then we'll get into a little more conversation in terms of how does that translate into business for them, right? Because sometimes you can often question that, okay, why is a bank should be responsible for managing financial health or well-being of a consumer? There's a lot of other issues which actually are determined, in terms of how someone's life or well-being will be. So, but there will be important things to learn from their experience. So, before, without taking too much of our time, I rather shift the floor to Evie and start with her maybe, and get her perspective on how does DBS looks at this entire agenda of wellness, financial health, and well-being. And if you can speak to the digital innovations that you have been actually working on actually pushing the envelope and the barrier beyond access and usage. So even the floor is yours.
Thanks, Jaspreet. So good evening or good afternoon, everyone. Here is evening in Singapore already, and I guess for Stefan it's still midday. I think I would like to share a little bit more about how we have done here in DBS Singapore in pushing the envelope. A few years ago, I think a lot of us here in Asia actually embarked on the whole journey of democratization of wealth management, this big word about making access available to many consumers, or as many consumers as possible when it comes to investing and insuring. At that time, the thinking was really to just lower the barriers so that customers can try to start investing or try to buy insurance. So all these terms about micro investing, micro insurance, started with $1, one share, half a share, all this term came into being over the last few years. And at Singapore, I think what we wanted to do, despite the fact that we are actually a global financial hub, we understood or we realized that actually consumers, their understanding of financial literacy remains very low. So there's a lot of over dependence, I would say, on government pension funds, or just, if I save and that's all good enough for me to retire at old age. And when we look at the trends, and which is exacerbated by COVID situation, is that in Singapore, many people, we are aging very fast. So there is a big question hanging around the head around retirement adequacy. So it is on this background that I think DBS Bank in Singapore started this pursuit about financial and retirement planning before all else around thinking around how to provide the solutions. Because what we come to understand is actually most people think when it comes to planning, it is someone else's job. It's my financial advisor's job. It's my banker's job. I need a lot of money before I start to think about planning. But we wanted to change all of that here with our customers. So we went back to really the basics. We started with things like, how do you even save? What is the right amount of savings that one should have to prepare for difficult days and disruptive days like now, right? Like when your income is disrupted due to a crisis. We went back to things like, if we want to save, does a budgeting tool and what we call PFM tool help them? And we started from there to build this, or rather rebuild this whole notion about financial planning shouldn't just mean investing and insuring, like what Jaspreet said. So it's not just about products, but it's really holistically looking at how well you're doing financially. And we actually define that in a few big buckets for us. One is how you spend your money, and hence that results in your ability to actually set aside emergency savings. The second thing that we definitely look at is around protection, and that comes to everything around insuring yourself for either illness. It includes things like personal accidents, so on and so forth, things that's unfortunate and you didn't foresee, and ensuring that people who depend on you financially can continue to live a normal and meaningful life despite what has happened. And thereafter, for us, the third pillar that remains now very important is to really take advantage of financial markets, and that's what we call investing. The reason why we decide to do all of this is underpinning it is really around ensuring most people can plan for retirement comfortably. And when we say retirement, it may not be like an old age. It could be, things like they can opt out to do something different. They can have the freedom to make choices of their lives that make them happy, for example. And also keep their family members and loved ones happy. So what we decide to do is to measure it from these few these few pillars as foundation, and in the long run we are looking at retirement adequacy, and that requires us to collaborate actually with the government agencies here in Singapore to support us in looking at how much is it sufficient for people to retire adequately and help them overcome whatever challenges they may have during their old age.
Thank you, Evie. I think I have a follow-up question for you on this point. These terms like PFM and products that you spoke of, these were all in existence for a long time, right? So what is different that we are doing now? But before I actually come back to you with that question, I'll actually would like to switch over to Stephen to actually get his feed about how does ING looks at this broader idea of financial health and well-being. And what does it mean for you at ING, really? And maybe I'll then come back to you, Evie, in a moment.
Sure. Thank you, Jaspreet. I couldn't agree with you more that inclusion is one step, but really zooming in on the broader concept of financial health is even more important, because I've also noted what Evie said about resilience, savings, basically, also planning ahead, and also having the option to invest. But ING is a global bank operating in 40 countries, more than 40 countries, with retail operations in about 10 countries actively. And what we still see, we're a predominantly EU bank, so in the European Union, although we also have retail activities in the Philippines. But even within Europe, the number of people which are not financially prepared for their future is quite high. But let me start by saying that people in Europe which face daily or monthly financial problems struggle to get by, make ends meet. That's about 50%. So that's in the EU. And additional to that, there's 44% of people that do not plan for their financial futures. So this is the thing. So what we try to do as ING is live up to our purpose, which is empowering people to stay a step ahead in life and in business. And there's no mention of money or finance in that, because ultimately, if you want to be customer centric, you have to be interested in, and that's also what Evie said, the holistic person or family involved. So we try to take that into account and look at what does the customer need, and what does that customer need in a digital environment, because 99.6% of all our interactions with customers are in the digital domain. So you have to not only look at the transaction at hand, you have to look at how can you add value to whatever the customer needs in his or her life. So that's a bit how we approach financial health holistically, as I said. So day-to-day things, but also planning ahead. And it's the additional element I want to bring is how do people feel about their finances? Because finances are not a fun subject like sports or entertainment. So you sort of need to take worries away and make it easy. So that's a bit how we approach it, and maybe that's in one of your next questions. But the thing is, you need to provide information when it's relevant to the person, but also if that person would know, that's not the same thing as doing. So the gap between knowing and doing, that's maybe also an interesting thing to talk about. But let's not take too much time and give it back to you for a minute.
Thanks so much. I think you made a very interesting point that, the difference between knowing and doing. Because my earlier point that I wanted to, put back to both of you was that what was really not happening in the banking sector for last so many years, right? That, financial inclusion is not a new goal, right? We have been pursuing it for, last decade and more than that. We have got like plethora of work done around that. We've got infrastructure rolled out that can be reaching last mile. We have got bank accounts and insurance products to hands of people, and in ways that, they want possibly, right? But what was really missing in this entire translation of products into something which actually a customer require, right? So that want and doing that you were just mentioning of. So it will be good to understand that why should we be talking of financial health now? Okay, how does it make sense from a business perspective? Where does it all kind of comes in? Because oftentimes when you speak to financial institutions, right, their first question would be, see, we are driven by our shareholder value, right? We want to get quick things moving, right? Financial health, well-being, this can be a very long-term agenda. You just cannot wait so long to show real value to the industry. Then how do you really convince them that that no, you have to think of broadening your vision if you want to really be successful as an industry, as a institution. But then what has been your own learnings around it? If you would like to go first, or Stephen, pick a choice.
I'm cool. I can go first. I was going to say, I totally agree with Stefan, right? I think one of the things that changed, I think, Jaspreet, you asked earlier, that has shifted a lot, I think, is the adoption of digital. That makes a lot of things, the discoverability of a customer's behavior a lot more apparent from the digital footprint and interactions that we probably may or may not have before. So you think about it maybe 10 years before when I first started work, or 15 years ago, when we want to do any kind of planning, it's a face-to-face interaction. It's probably written down by the advisor, and everything is in the advisor or the professional head, right? The person's head. So it forms this impression that, well, when I want to plan my financials, when I want to do long-term planning, I find someone from the bank or another financial institution. What we have done differently this time around by going to the basics is to really explain to consumer what does financial health really mean to you.
Right.
And I think Stephen shared a very good point about the fact that it means different things to different people. And now we can observe it, meaning many customers can have the same starting point, $10,000 in savings, but they do different things with the $10,000 and what it means to them, whether it brings them more happiness buying something or investing or trading, or buying an insurance plan. So that is the difference. And I think technology and data provides us with scale. Coming back to the approach of how we have also done things differently through many lessons learned, we found that we approach the whole thing through three key pillars. One is raising literacy, and that we can't do alone here in Singapore. We do it with many, many partners, universities, higher learning institutes, the exchange, our government pension funds, to raise literacy levels and to teach people very basic things like 101 items. What is an equity versus a bond? When you see all of these things, what does it mean? The second pillar is the guiding. So the part about presenting this tool that is more over and above than a budgeting tool to guide the consumer on how to make these decisions, and using data points to in a way to nudge them, right? So if Jaspreet already reached emergency savings, maybe I ask him, do you want to think about investing, taking your first step to investment, and what kind of risk appetite could you possibly have, and ask you a few questions. So those things, we have created this tool called DBS NEF Planner that guides the consumer. Then again, from the tool, the so what continues. I bought my first portfolio and it's worth $1,000. So what's next? And then from the tool, we will tell them, well, for retirement planning, you don't need $1,000. You need maybe $1 million. So it's a long way to go. Or if you want to buy a house, you might need a lot more than $1,000. So what's next? And what's next? So then the solutions and the growth comes in. So I think where things have really progressed a lot, I think, is the ability to leverage data and technology to help us. We have also learned a lot about customer experience from various companies, right, beyond the financial institutions, on how to hear customer out, think, how to feel, what they're going through in life. And I think I'll end with one very good example that we had in Singapore when we launched this tool. So we launched a so-called full generation of it, or full version of it last year when Singapore went into a lockdown. And we so happened we had our press conference and we had to do it digitally like this. And at that time, market was very volatile, if everybody remembered. And we expected all of our customers, and here we are a dominant bank, so we have like 5 million customers. So we expect all the customers to go into the investing tab and start trading and do all of that stuff. But what surprised us was all or rather majority of the customers who started to use this tool when we invited them, they went into what we call the protection route, where it focuses on are they insuring enough for uncertainty? And those questions came up and it took us by surprise as well. So we then need to respond quickly to it. And that's one of the learnings that I would share, from DBS's perspective.
No, thank you so much. I think you made a very interesting point in terms of, how this COVID and when you basically put this tool out to the market, how people responded to it. And just coming back to Stefan on picking up the same point that you mentioned, Evie, on how data and digital has helped shape, this conversation or planning process much more easier, right? I just wanted to, get Stefan's view in terms of how these learnings actually get translated for a developing market or a developing market, LDC for that matter, right? Because Singapore obviously is on the very end of the spectrum. We're a very high income country, right? But then from your experience, how all of this actually gets translated? Does get translated, especially for the low and moderate income communities, and to what degree and level? Stefan.
Yeah, it's a good question. I think every country is a bit different in the context, so the guiding that you give next to the tools is very important, and it's very context driven. So you should have local knowledge in there. It's not as if you can have one global app with all the same information. So how I see tooling is a bit how I see banking. It's a means to an end. So you have to sort of really be interested in the customer, and then use the knowledge that you have in-house in the digital domain and in the building of tools, just as building blocks towards that better experience and that relevant experience to guide your customers. I think additional to what Avi also said, I think literacy is very important. And I also like the fact that the OECD, since a few years, also includes behavior in that. So that behavioral aspect, so that people know, but also apply it. And I think for us as banks, we have a sort of a responsibility to take into account how people relate to money. So in your digital tools, you need to make sure that the environment and the choice architecture that you provide is in such a way that it is in the interest of the customer. You also asked about, okay, how is financial health then related to the business? Because how I heard that is also, why would people within your organization really care about financial health if there are sales targets, for example? And if that's also part of your question, then I really relate to that, because I think within every bank probably, but certainly within ours, you do have several KPIs, several targets that are sometimes conflicting in terms of time horizon. So sometimes the focus on financial health and long-term financial health, that could conflict with KPIs that are set on the short term, which are about certain sales targets, certain profit targets, etc. So I think it starts at the top to set the right KPIs, and that's one of the lessons learned I would take from the journey that we've been on, because thinking through, okay, we started with our purpose. You probably know that book, Start with the Why. I mean, several organizations around the world have taken that to heart and have started defining the purpose. But that's probably the easy part, because part of the purpose, then you have to have a strategy, but more difficult, have to have the operations in the field that are in line with that. And that's sometimes difficult. So that time horizon and including that in the digital experience and tools that you provide, I think that's very important, and that's what we think. We learned a lot from in the journey. And shortly about your question, okay, you know, Singapore at the very one end of the spectrum, and let's say the more materially poor countries at the other end. But in the end, it's a digital environment, right? So if you're interested in the customer, you probably know the customer base, you know what they have. And as I said, even in the European Union, we still see high numbers of people struggling. So still, financial health stays relevant regardless of the material wealth level you're at.
No, thank you. I think you made some interesting points, Stephen. That one, how it is important to localize and contextualize your, engagement process with a customer in the market where you're in. And obviously, all markets are different for that matter. But what I hear from you also is the fact from both Evie and you that if you want to really bring the financial health or wellness agenda within an organization, it has to start from the top. Okay, it has to be championed within the organization right at the highest level to be able to percolate down in the entire organization. It cannot be a siloed one department approach, that okay, this department is going to work on financial health when other departments are kind of still running after the sales target, right? So it's never going to basically work as an agenda, which often happens because we often work in a lot of silos within our systems, right? So we often don't speak to each other. So how do you really make it work and get it championed in that way? I do have a follow-up point on this again, because Stephen, you mentioned of how this translates into a business viability or sustainability for institutions, right? And how they need to be looking at it, not merely from the perspective that we are basically talking beyond products and we are happy to support consumers in better planning process, but it actually translates into better brand loyalty, if I have to kind of put it that way. I don't know if you would agree that idea or not fully. And then how does that brand loyalty helps create better long-term value with the organization in the era where we live today? People and new generation, they don't stick to just one brand. They will move from one to the other very quickly, based on who's offering the best service at that moment and that point of time. In older generations, you would have heard of this, that, oh, I have one banker and I have stayed with that banker for last 40-50 years. Okay, maybe today I have like 10 banks with whom I'll be interacting. So how do you look at this objective of financial health and translating into this brand loyalty and long-term sustainability? If we can come to you first on this and then go back to Stephen, and then I'll let you have other questions for yourself as well, so go ahead.
I think how we look at it, to be honest, it's like doing good and doing well shouldn't be the opposite sides of the coin. So it should be the same side. And when we think of financial planning more broadly, to Stephen's points, rather than looking at it narrowly in terms of just say insurance or investing or financial solution, actually the consumer or any customers or even myself as a customer would need the full-blown type of view around how do I plan. So if you think about it, a young person today, the single biggest problem is actually buying a house or afford to buy a house. And people borrowing for very long term in order to repay their home, for example. Here in Asia, this is definitely very true. Here in Singapore, it's very true. So the fact that they have to commit long-term liabilities at an individual level, how is it sustainable at the same time to be able to grow what we call their wealth in order to ensure it can sustain in the long term? That is longevity in the relationship. So we see actually customers move from one life stage to the next, going through this transition. So when they buy their first home, they would have to, look at what is the affordability, not just on the so-called down payment, but on a sustained basis over 20 to 30 years. Then they would have to look at when they have kids, what's next. So, and so on and so forth. So all of this so-called life choices and life stage changes actually translates into expense in their day-to-day. So it is something that everyone needs to consider. So when we think of it like that, then it wouldn't be a very short-term type of conversation. It is actually a longer-term part. And what I think I would love to also hear from Stephen or anyone else is really the the part that I think Jaspreet and I have spoken before about really measuring that part of the impact. So the measurements, I guess, today is less clear. How much is retirement adequacy in a particular country? How much is, when I say I'm doing well financially, what does that mean? Is it no debt, some debt, good debt? What is good debt? How do I measure the value of my assets beyond financial assets that has, mark to market value? So I think these challenges are less things that we are grappling with as well, and we are learning how to communicate to our customers what does that benchmark mean. And it's something that I really look forward to see, many other countries, for that matter, many other players in the industry would come forth and share how we can do this better and more, I guess, acceptable by the larger public, the public at large on this measurements. Yeah.
I will let Stephen respond to that directly. Stephen,
Yeah.
you.
With pleasure. Now, interesting points you raised, Avi. Maybe start with one element that was mentioned by Jaspreet. Indeed, I said indeed start at the top, but so for example, ING is quite a decentralized organization, so that has its advantages that the business unit really are close to the clients in the country at hand. So it's a together. It's not as if everything needs to be determined at the top and then the rest just follows like sheep. It's a bit of an interaction, but in the end of the day, the KPIs need to be such that the long-term goals and financial health can really come to life, can really give meaning to what the customer needs. On the point of measurement, that's a very important point. It also boils down to what should we be actually measuring, and I think a lot of relevant work has been done. Well, actually, in the past year or so, there has been a peak in the white paper of the UNCDF. In other UN bodies, there's been some relevant work in converging definitions of what financial health actually is, and some parts I think you can measure, but some parts are more subjective. So it's up to people and families how they feel about their finances. If they have everything in order but still feel stressed, that's also an indication of something isn't right. So I would take that into account. And also on the data privacy front, so how can you make use of customer data in such a way that it's not against, well, the law, it shouldn't be for sure, but also not crossing the creepy line so that people feel they are being watched or manipulated. You don't want that, and you don't want to manipulate. What you want to do is to have a better view of how they are actually doing, because people can say they are concerned or that they are well, but what do their bank accounts say? And if you can combine those things, I think that's the point where you want to be. And in the pre-conversation with your colleague Avi, I also heard that you're making steps. I mean, already applying that to a large extent, and that's very good. We've also started doing that, but it's country by country currently, to be honest. And but I think those are the elements that are relevant in this discussion.
No, absolutely, and I heard the term invisible bank, where DBS is moving towards that idea that it should be everywhere, and and how it's going to interact with the consumer. But yeah, I think I'll just kind of open this floor. Maybe Evie, if you have any further questions for Stephen, or Stephen, if you have vice versa for Evie, please feel free to ask. So floor is yours, Evie.
Yeah, I was going to say, when we say Stephen, like when we in European context, where it is so aging and people don't, as you said, 44% you mentioned, don't yet planned. What do we think today? A lot of the barriers is the fact that they don't know and they don't care, or is that the barrier is that, they still feel that it's completely out of reach in terms of hurdle. For example, the misunderstanding that I need $250,000 before some advisor will actually sit in front of me. What do you think is the common sort of misunderstanding about, having a plan or being healthy financially?
Yeah, I think what's a bit causing that, but that's my view on it, personal view, is that money is just perceived as boring, complex. You don't want to engage with that. That's for tomorrow, not for now. And that phenomenon, that's important to take into account. So how can you actually reach people? And I think so. I mentioned data, but there's also behavioral science that can. So if you combine those things, that you can, okay, you cannot get people to act. They delay it. How can you? There are mechanisms to have people commit to their behavior tomorrow. So how can you apply that in your digital environment? That they have the choice, but you have to sort of guide them. And also, I made a bit of publicity in the beginning by mentioning our purpose, which includes empowering. But empowering means different things to different people. So some you can provide tools, and then they say, "Leave it to me," and then they do it. But many cannot handle tools. They need a bit of guidance. So how do you guide them? When is it information overflow, etc.? You have to ask those questions probably per country, and I think that's the way to move those percentages down. The other thing is, as a bank, it doesn't matter how big you are, you cannot change the world. So you need to keep that SDG, that final one about partnerships. You need to take that into account. So how can you collaborate? If you're really true about your purpose, if you believe in your reputation and how that creates shareholder value or whatever kind of value in the end, how can you most effectively collaborate with governments, with NGOs, with private corporations, etc.? So you have to ask yourself that question. But in the end of the day, our approach is twofold on the topic of financial health. It's the biggest impact is with our customers. That's one. Second, we have a community investment approach. So we support people, and especially in three things: with their financial capabilities, with their future-proof employment, so digital skills, and also through social enterprises. That's a bit what I wanted to add to how we bring the topic to light.
Very interesting.
No, thank you so much, both of you. I think certainly you made some very interesting points, and I think the real learnings are that as institutions want to get on this journey, they have to start championing it from the top. Customer centricity is such a core thing. We keep on talking of it. It should not be a namesake. You have to really apply it in principle, right? Data and digital can be a very good way, and it is that pathway that you can really use to move in this direction. But possibly you have to kind of bring in the behavioral aspect on top of it to really make the data and behavioral play out together to really create worthwhile solutions and services for the consumer and the last mile. Nonetheless, the entire idea of measuring what the success really looks like. Okay, so you have to also expand the definition of measurement and what you're going to measure in terms of maybe objective and subjectively. But that's where this entire journey has to really roll, if it has to. And I think that is something which we are all learning as a global world. I think Stephen mentioned in his point that there has been a lot of efforts over the last 1 year or so. So we do have a global working group, with the Queen Maxima, who's the advocate for inclusive finance on behalf of Secretary General, who's leading this entire effort, as well with other UN agencies, including UNCDF, UNEP, World Bank, and all. trying to really think that what this global expansion would really mean. Okay, why? And I think the timing is just right because we have gone through that phase where we have done a good enough work in terms of rolling out the infrastructure. Things have moved and shaped to a different level now from where it was 10 years back. But we have to now start planning for next 20, 30 years, right? And what that vision should look like so that we have create markets and the systems which are more tuned to the consumers, and especially all set of consumers, the low income to high income. You just can't kind of differentiate between them in that way. And I think that's a journey which we are all kicking off or starting on. And it's good to see that the banks like DBS and ING are taking a lead in at least championing that conversation and taking actions around it. I'm sure we'll have a lot that we're going to learn from both of you over next couple of months and years, which we like to share with the global world and see how these efforts can be sustained out in across different markets, small or big for that matter. But thank you so much for taking out time, Stephen and Evie, for this conversation. It was really wonderful hearing out all that good work you guys are doing, and we look forward to continuing this conversation with you even going forward.
My pleasure,
Me too.
Evie.
Yes.
Thank you so
Thank you.
much.
Nice meeting you, even though virtually today.
Absolutely. And I'll hand over to Swati for the closure.
Thank you. Thank you so much, Mr. Singh, for coming over and moderating this particular session. Thank you, Evie and Stefan, for giving your time and being here and making this possible. Thank you so much, everyone, and delegates. Thank you so much for joining in and participating in Global FinTech Fest. Thank you, and have a nice day. Thank you.
Thank you.
Thank you.